appreciate y'all coming to hang out with us on this wonderful Wednesday. We're going to run through a couple of quick technological checks here, make sure everything is working correctly on the back end, and then we're going to turn things over to Sam and get to some awesome content. Hey, Mirza, Amelia, good to see y'all. Hi, Sarah. Good evening, Bob. Looks like the audio is working. If anyone wants to, feel free to type in on the lower left-hand corner of your screen there. Say hello. Feel free. Let me know if y'all are having any issues hearing. Looks like everything that I can see is green so far. That's always a good start. Hello, hello. Also want to double check and make sure that the video is working. Do y'all see a pink clock moving in front of you, at least on the screen? Yep, yep, yep. Loud and clear. It's funny. I read that loud and clear is in the pink clock was loud and clear. I guess that kind of makes sense too. It is a little bit loud. We'll try the blue clock maybe next time. Yes, yes, yes. Yes, indeed. Everything is working. Everything is good to go. Perfect. All right, man. What a good start. So I want to let you know that we are in a large open webinar this evening. And as such, when we are in one of our large open webinars, we go into what's called webinar mode. So you may have noticed as you type in any comments or questions to your chat box in the lower left, everything that you type in is visible to you. It is also visible to all of us here in the background. However, it is not going to be visible to everybody else who is here attending the webinar. And we do that just to make sure that we avoid any potential distractions or just anything that can I guess distraction, yeah, anything can detract, there we go, from the presentation. I'm here to pay attention to Sam and what he's got to show us. And for not had the privilege to watch a webinar with Sam before, he is a very thorough and well planned out presenter. Not only is he very thorough and well planned out, he's also very entertaining. Oftentimes you'll find that he's kind of leading you down a path in the presentation, and if you do have a question, he's probably already expected you to have a question in your mind around that time and already has that addressed later on in the presentation. It's actually uncanny how good he's at that. But y'all will see. Just pay attention and watch. And because of that, just know if you do ask a question, it might not be addressed immediately, mainly because of the presentation, but also because even if something does get missed, Sam is very generous with his time, and he will spend a little bit of extra time at the end of the presentation to go over any additional questions y'all may have, kind of an extra little impromptu Q&A. And then lastly, I also want to let y'all know that this entire webinar presentation is being recorded. So you don't need to worry about your own recordings or screen captures or anything like that. We totally got your back. It could take us a day or two to get the recording out to your email inbox. We always send the recordings directly out to the email that you signed up with when you joined the webinar, or I should say when you signed up to join the webinar. So if you don't see us within a day or so, just double check your email inbox for recording, webinar, simpler trading, Sam Shames, anything like that. If you do find us in one of your like spam, bulk, generic, clutter, etc. Email folders, just feel free to drag us over into your inbox or add us into your address book. We're not a spammy company. We're not going to send you stuff you don't ask for. So we're certainly safe to add into your address book, your safe senders list. And I believe, yep, that checks off all 4 items that I wanted to cover. Beautiful. We even had a schedule. I like it. Tonight is going a little bit too smooth. I shouldn't have said that yet. All right, y'all. I'm going to go ahead and get out of the way. Sam, the podium is all yours and ready to rock and roll. Take her away.
Hey, good evening, guys. Great to see you. Happy Wednesday evening. Thank you, Mr. Darrell, for the intro. That never gets old. How many of you would pay for Darrell to introduce you every time you walked into a room. That's the goal in life. Walk into a room and have Daryl introduce me. Life would be much better that way. All right, guys. Well, again, thank you for making a little bit of time for us, especially after hours. It's 7 o'clock here in the Central Time Zone. And regardless of where you are, at least in the United States, it's outside of normal market hours. So always really do appreciate you guys putting in a little bit of extra time. Really just it's an appreciation and a little bit of kind of hats off to you, because, you're doing the extra little bit that it takes to be take the next level up in trading. So hats off to you guys for being here. So what are we going to talk about today? What I wanted to share with you guys was how I prepare for every trading week. And I think that that's going to be really, really, it's always been important. Before, maybe a year ago, it would have been maybe a little bit less important, because your weekend preparation could have been putting on a blindfold and throwing a dart at any 5 companies in the world, and whatever it hits you buy, and you probably would make money. But now that's clearly not the case, right? The markets have gotten a little topsy-turvy. So this kind of stuff is a lot more important. And as we go along, I just want you to make a couple of notes on your end in terms of stuff that you think maybe you can add to your own preparation that might help you become a better trader during your entire career. So with that out of the way, let's dive in. So how many of you guys are enjoying this market? It's a fun one, right? It's like being on a roller coaster ride, blindfolded and backwards. And it's been a wild ride. The market is, up huge one day, right? Just this week is a perfect example. And then it's down huge the next day, right? And it kind of makes you feel like maybe you're constantly just kind of chasing this dollar bill down a hill, because the market shifts so quickly. So how can you turn that maybe frustration of a large group of people into maybe an advantage for you, right? Because as we go along with the presentation, anytime that you hear volatility, remember that as a trader, volatility is just a synonym for opportunity. So without volatility, there's no trading. So as volatility goes higher, the opportunities are certainly there. Love this little graphic. So it is a difficult market environment. I think that goes without saying, right? Especially transitioning from how easy it was before, especially if you're new, because for the last 13 years, and remember to stick around until the end, because I'm going to show you 2 really big, well, maybe 3 really big signals that are going to last for the next couple of years. So I don't want you to miss that. So be sure to stick around until the very end to see those signals. But right now, the market environment has certainly changed, right? It's I have the word difficult staring at me in front of me here with the slide, but in reality, I just want to say it's much more volatile, is really the correct way to say it. And markets have been all over the place this year. So how do you find your edge, right? How do you find your edge in such a kind of crazy market where it's up 5%, down 5%? That's not normal. And at least for myself, it comes down to really 3 things: having strong indicators, having the right strategy, right? And really the right strategy means the right risk tolerance. So that's really an important thing that we try to emphasize, is risk tolerance. And also, and the focus of why you're here, the weekend and the pre-market preparation, so that you're ready for anything, right? The main thing is to be ready for anything. And then another really good graphic. Kind of perfect for today. I should bust that one out for later today. So what are you guys going to discover tonight? Well, I'm going to talk to you about the process and the importance of the weekend and the daily prep work, with a focus on the weekend work for this particular session. I want to show you how I do my own weekly prep work, so that you can either incorporate that into your own trading, or really just build off of what I'm going to give you. So I'm going to also show you how to evaluate the current market environment. We're going to talk about how to prepare each weekend like a professional trader. So again, as we go along, do drop your questions in the chat. We have some really helpful mods in the background. And what they're going to do is they're actually going to put all the questions into a folder. And then at the very end of the session, we'll go back and answer those questions. So if you want to post a question, definitely feel free, and stick around to the end so that we can get a chance to answer it. And then lastly here, in terms of what will you discover tonight, most importantly, we're going to discover the value of time, right? So before I continue, I've always been a little bit time obsessed, even since I was a kid, for whatever reason. Probably not a good trait to have, but I've always been a little bit obsessed with my time. And as we go along, just kind of think about how long this type of process may take to do over the weekend, right? And just think about the value of your own time as we go along. So I'm going to be showing you a couple of trade examples that I've done. The arrows are kind of, where I got in, where I got out. I'll show you my indicators here in just a couple of slides. So right now, don't try to make too much sense of the indicators themselves. I'll give you a little bit of a crash course on the indicators so everything makes sense. But here, I just wanted to show you, I'm going to be showing you a couple of trade examples. And I don't think a single trade example that I'm going to show you is going to be found in the traditional kind of hot part of the market. So the hot part of the market, what was it before? And frankly, for like the last 10 years, maybe actually longer, like 13 years now. It's been tech, right? It's been the Apples, the Teslas, the Amazons, the Googles, right? But those clearly have lost their mojo. So you're going to notice that as I show you these different examples as we go along, they're really none of them are going to be in these traditional spots in the market. But that's okay, because guess what? As the sun sets on the fangs, the sun will rise on a different part of the market. And really, it's your job as a trader to be able to isolate when that's going to happen so that you're not still stuck trading the old modality. So here's just an example. I love when that happens. Here's an example of a trading a little bit outside the box. This is a couple months ago. And this is a Mosaic position. A lot of you guys are now familiar with Mosaic because it's popped off extremely strongly. Mosaic, if you're not familiar, is a fertilizer company that's really well tied in with the commodity run. And you can see here where I got in, kind of a little bit of breakout candle there, low compression squeeze. We'll cover the indicators a little bit later, but just notice how clean everything looks here. And I'm a little bit of a faster trader. You'll notice that a lot of the examples that I'm going to show you, they're kind of 1 to about maybe 5 days in the trade. That doesn't mean that you have to be, right? It's just the way that I trade. And I think this is a really good example because you can see here, and I'm kind of looking at it now and kind of hating myself a little bit for leaving so much money on the table. But you can see I got in right here on this breakout candle because everything was aligned. You can see over here, the squeeze is perfect. The indicators are just literally perfect. Green arrow, in trend, squeeze, stack moving averages. Could not be any more perfect. So you buy that breakout, but it pops so much the next day, I just decided to take the money. So on this trade, I took 70%. I bought it on Friday, sold it on Monday, made about 70% on the trade. But you can see here that even if you are a slower trader, the idea would work even more for you. And by slower, I just mean you have maybe a longer time horizon, like maybe your time horizon is 2 to 3 weeks. And look what happened after I got out. Way more, right? So pay attention to that as we go along. You're going to notice that sometimes I sell perfectly, and then oftentimes I'll leave a lot of money on the table, but that's just a function of being a faster trader. So a little bit about who I am. A lot of you guys are familiar with me. You're in the gold room, you're in the trading room, etc. My name's Sam Shames. I'm the VP of options here at Simpler Trading. I've been trading for 10 years, longer than that actually, since 2006. So however many years that is now. I don't even want to say it out loud. That's a long time. I've been with Simpler Trading for 5 years. And a couple of things about me, I'm actually a pretty simple guy, right? I'm like overwhelmingly simple in what I care about. So the only thing I love in this world, there's only 3 things. And number 1 is animals. Number 2 is trading. And number 3 is my friends. And I found that keeping things simple, not just in trading, but hopefully in life, really helps everything come together. Oh, and I love wiener dogs, by the way. Just a couple more pictures here. So again, love animals. This is when we went down to Mexico and I got a chance to swim with some dolphins. I don't think I've ever been happier in my life than playing with that dolphin. I wouldn't have thought so, but I got a chance to dance with them, and they had a baby dolphin in there with them, and they're just such majestic creatures. So let's talk a little bit about finding your edge. So as we go along here, I really want you to be introspective as we go along, right? I want you to kind of turn all this back inside of yourself, because the reason that you're here is not to listen to me talk. The reason that you're here is because you want to become better as a trader. And there was something about something, whether it was me in the room or an email or whatever got you here, that made you think that you would be able to get a little bit of an additional technical edge to your trading that would make you a little bit better every day. And if you stack that edge over time, it adds up to a huge edge over time, right? So as we go along, remember to be a little bit introspective. I'm going to ask you first, what is your edge, right? If I were sitting across from you right now and I said, hey, person, what is your edge in trading? How would you answer that? And maybe write it down and think about it. So in trading, traders need edge in the market to succeed. You need to have some type of informational edge, charting edge, strategic edge, psychological edge, some type of edge that just gives you a little bit of a curve over the average trader. For myself, doing the prep work over the weekend is what gives me that technical edge. Um, I think I have really very strong indicators. I have a decent understanding of how things, in the economic world connect. But really, the strongest edge that I've been giving myself over time is that weekend preparation, and that's what I'm going to focus on. Right, I want you guys to become kind of chart nerds and preparation nerds, so that you get excited about this kind of stuff. And the good thing about that is, if you have that weekend preparation, you will make stronger trading decisions with confidence. You won't find yourself not knowing necessarily what to do. So having a strong foundation and preparation helps you find opportunities. And then it just helps you not focus on one stock, because that's just your heuristic, right? That's just your go-to. You'll have a broader view of things, because the stuff that I'm going to bring you, we look at everything, right? So it doesn't matter what you trade. We look at everything. We try to find the best things, and then we only focus on that for the week. So I'm about to show you my indicators here in just a second. A lot of you guys actually have the indicators, or you're very familiar with them. But if you're not, I just want to give you a quick, maybe 1 to 2 minute crash course on the indicators. That way, as we go along, and I'm showing you different trading examples, you'll be able to look at the indicators and see why I made that decision, right? It's very important that you're able to kind of reverse engineer the process and understand why I made the decision. So we'll just do a little crash course here in just a second on the indicators. But first, before we do that, I'd like for you to try to find the elephant, and maybe we can offer a prize to the first person that does. And so, do you see the elephant in this photo? And if you don't see it, maybe try turning your head or closing an eye. It is there. You just have to look closely. If you don't see it, it's something wrong with you. You just have to look closely. Do you see it yet? Well, here's the thing. Maybe there is no elephant. Humans will want to see patterns in noise that are not there. That's just that's just the way we're wired, right? We always want to see patterns in noise that are not there, and the markets are an exceptional manifestation of that, right? Because there's so much going on all the time, everywhere. Strong indicators and, frankly, strong preparation help us see through this and just avoid the noise, and then that way you can capture the signal, and that way you're not looking for this elephant that may or may not exist in this Jackson Pollock. So how do I find edge? I'm going to kind of break it down into 2 parts. The first part is just having a strong set of indicators. No, I'm not here to give you my indicators necessarily. What I want you to do is just on your own, be sure that you can, again, quantify why you use every indicator that's on your chart. And if you can't quantify it, maybe reconsider it being on your chart. But for what we're going to be doing here, I do want to show you what indicators I use, just so that you can make sense of them as we go along. So I use 2 indicators, keep it very simple. One is for trend, the other one is for range, right? So markets can do 3 things. Last I checked, they can only move in 3 directions. They can go up, they can go down, and they can go sideways. So you need an indicator that covers you for up and down, and you need a good indicator that covers you for sideways. And if you have those 2 indicators, you're ready for anything. So let me show you my indicators. So here's an example of Chevron stock. Took this picture a while back. And I like this example because it's a perfect example. So this is going to be the crash course for you on the indicators. This is the trend oscillator. This is the high-low pro. The most important one is the trend oscillator. Notice how the green line is climbing and the red line is climbing, right? You can also see it here on the daily. That's the weekly over here. That's a W, I promise. That's the daily. See how the daily has the same pattern? That's what you want. Whenever you look at these indicators, that's what you're looking for going forward. Does it have that pattern underneath it? What helps when you have this pattern, and that really is enough. When you have it that good, it really is enough. But what helps is when you have these thrust signals underneath as well. So think of these as thrust signals, and think of this as more a bird in flight, very easy kind of trending kind of stuff. So as we go along, just keep an eye out for this. Maybe a couple of thrust signals and squeezes. And that's the trifecta that we're looking for in terms of the indicators. And that's what helps rate it all out so that we understand where the strength is, where real strength is in terms of how it's dictated by the indicators, and where we may not want to focus too much. Something else that I do here, and again, this is going to be maybe your first opportunity to take a good note for yourself, is going to be understanding flow. So in markets, money kind of flows through the system, and it's really important, in my opinion, to be able to understand this type of flow. So anytime that I do this weekend work, and frankly, whenever you do your own weekend work, I do strongly suggest that you look at things in this way, at least initially, because over time it works. The first thing you should look at is the broader market, something like SPY or the QQQ. After that, you must fully understand this first. Then and only then do you go on to the sector. In this instance, it would be energy. Notice that based on this pattern here, the squeeze and the perfect trend oscillator and the stacked moving averages, that's something we want to trade. So we investigate one level further. And then only then do we then land on our stock. In this case, it's going to be Chevron again, right? So try not to be the person that just goes directly here and misses the bigger picture downstream, or maybe upstream in this case, right? Because this important thing, this is the least important thing, but the best trades happen when they connect all together. Pretty simple stuff, right? Pretty simple stuff, but remember to do it. So I gave you a crash course on the indicators. You are now all official experts on using the High-Low Pro and the trend oscillator. So I think it's time for a quick pop quiz. So here we have 3 markets. We have the QQQ, we have XLP, and we have XLE. So technology, staples, and energy. Looking at just the indicators, try to ignore price. Crazy to say, right? But let's ignore price. Just look at the indicators. Out of these 3 charts, which one do you want to be trading long? Which one looks like the best one to go long? Again, remember to focus on the trend oscillator. You know what you're looking for. Which one looks like the best long? Which one would you want to maybe go short? And which one between the 3 would you just maybe not do anything with, considering that you have a better one to short and you have a better one to go long? So the one to go long, and I'm sure all of you got the answer right, is right here, right? It's just kind of a perfect looking chart. So this is the one we want to go long. Which one would you consider going short? Would it be this one? Well, it's not as perfect as this, but you really don't want to short this when you have something like this. You see how the red line's on top of the green line this time? That's what you want to short. You see the thrust signal lower? That's what you want to short. And then when you have something that you can go long and then something you can go short, you just ignore the noisy stuff in the middle. So I'm sure you all went 3 for 3 on that. So here's another example. I call this one trading coal like it's tech, just because there was a moment in time there where this kind of stuff, the kind of alternative energy plays were moving like tech used to move, like Tesla used to move. It was just this time it was coal. So they told us that coal would be no longer used, and here we are. So this is BTU. It's Peabody. It's the biggest coal company in the world. Again, the arrows are where I got in. On this one, I actually don't think I had a great entry. I think I got in right there. So I had to sweat it for a day, but then I got out here. And then the setup did keep going, right? It actually went considerably higher after I got out. But again, you can see why I got in. I've drawn arrows to everything. Everything is really, really, really nice here. So we don't care that it's not Tesla or Amazon. We try not to fall in love with these things because these stocks don't love us back, right? They're just vehicles to get to where we want, and we always want to be in the best vehicle. And in this instance, I think Peabody was a pretty decent little trade here. So I was in this trade for 3 days. We pulled out about 38% on it, and we called it good. Little alternative energy play. So let's talk a little bit more about the preparation, right? You guys are all now experts on the indicators. You'll know exactly what to look for, so I don't even have to explain them when I show them to you from here. But let's talk more about why we're here, really, which is the preparation part. Also, just as a reminder, feel free to ask those questions. Even though I may not be looking at the chat actively right now, the mods are keeping a tally of the questions. And if you stick around to the end, we'll definitely make some time to go through them all. So how do I find edge? This is part 2. Thorough, complete preparation. So let me show you what my weekend prep work looks like so that you have a model or you have a template to model after, and so that you also understand what it takes to do this full time. So let's just do this one. So this is what this week in the markets report will look like. At the very top, it always starts with the story of the week. We'll cover this a little bit more later. It's not that important right now, but it is the most important part of the report, because what I'm going to do here, you can see the story of the week. This is kind of me putting it all together for you, telling you how we're going to trade this, what we're going to do, what to look for, what if it doesn't happen. So this is our game plan. This is our playbook for the week, and we start with that. Underneath that, we have the sectors to focus. So after doing all the weekend work, we then only want to focus on the strongest things, and then we also want to short the weakest things. So we list those out as well. Below that, we have the watch list, which is kind of a curated version of what I'm going to be looking for. And going forward, the watch list is actually going to be even more curated than this, because you can always really just kind of narrow down to the absolute best. But this is kind of, the watch list basically comes down to, this is the only things that we're going to look to trade this week, no matter what. If we're going to get long, we're going to get long some of this. And if we're going to get short, we're going to get short some of this. Below that is all of the different sectors, right? So I'm not going to go spend a lot of time on this because it's a lot of stuff, but I'll just scroll through it so you can see what we're doing here. You have the SPY. We talk about it. We rate it out technically. We tell you why we came up with that technical rating. We tell you the levels. We tell you kind of what we're looking for and what's going to happen next. And then we attribute a rating to it at the very bottom, right? And of course, that just helps guide the way. So you'll notice that this one says bear minus, this one says bear. Obviously, bear minus is worse than bear. So that's kind of how we do that. We do all 4 indices. We do the dollar. We do Bitcoin. We do high yield bonds, right? And of course, even if you don't trade any of this stuff, all this is going to do is give you color for what you do trade. Because guess what? If you're only, let's say you only trade the SPX, like you're just strictly an SPX trader. 1, I would probably get along with you. 2, you might say, well, I only trade the SPX. I don't care about HYG, junk bonds, but you should, because they're interconnected, right? So all of this stuff gives you color for what's going to happen here. We cover commodities, energy, metals, gold, grains. We cover volatility, and then we cover internals. And notice that everything has a rating next to it. We also cover the yield curve. We'll give you the calendar. We give you the scans, and we give you the earnings for the week. So I'll just scroll through this one last time here, very quickly this time. But, and of course, for your own preparation, it doesn't have to be this thorough, but I think if you're looking to take the next step in terms of your trading career, regardless of whether you happen to be, whether you're day 1 or whether you're day 10,001, adding this to your weekend prep work will absolutely give you more confidence in your trading. So make sure at the very least that you're looking at the indices, maybe take a look at the dollar, definitely understand rates, and then have a very good understanding of volatility. I think that's a very good place to start. So just helping you pad out your notes there a little bit. So that's a little preview of the report. So why do you need to have edge now? Well, I think we kind of covered it to start. The markets are no longer under the wing of the Fed, right? It was for at least the last 2 years, but definitely longer, but went turbo the last 2 years. The markets were, the Fed was kind of like the wind beneath our wings. But now that that's gone, and now the markets are all over the place, right? So they're constantly changing, and the current market environment makes sitting in a trade very difficult, very, very frustrating, right? Because you can be in a trade, you buy it on Monday, it's up, let's say 3%. The next day it's down 3%. The next day it's up 2%. The next day it's down another 3%. And maybe on Friday it's up 1%. And then guess what? Monday to Friday, the thing didn't move, right? So sitting in trades is not going to be as comfortable as it once was. And therefore, you just have to take more actions and be more prepared. Market cycle is more selective of market, is more of a selective market due to the rapid rotations that are happening every single day. So you're certainly seeing that, right? One day tech is hot, the next day it's energy. So you want to be on top of that. And I'm going to show you how to not only be on top of that in terms of your weekend preparation, which I'm going to provide for you, but then I'm also going to show you how to do the daily morning prep work, which takes about 15 minutes, but is one of the best, most important parts of the trading day. So I'm going to show you that, and also in just a little bit. Also, don't forget, right, as traders, the market is a competition of information. Now, it would be incorrect for me to tell you that it's you versus the market. And the reason it would be incorrect is because the market doesn't even know you exist, right? If I jump into the ocean and a giant wave throws me out of the ocean, I don't think that the ocean has a vendetta against me, because the ocean doesn't know that I'm there. But the market is a competition of information. And if you're not prepared, then another trader who has done the work before the day starts will take your money. The market is a place where the impatient and the unprepared give money to the patient and the prepared. So here's a little preview of my weekend setup. How many monitors is that? 5. And nobody said it was easy, right? Nobody said this was easy. This is a very lucrative game. It's a very high stakes game. And because of that, it's not necessarily an easy game. It is fun. It is very rewarding. But nobody said it was easy. And so just to give you a little preview of what this looks like, this is kind of what I would sit down on a Saturday morning and look at. And you can see there on the far left, I have the quarterly charts, the monthly charts, 3-day chart, 2-day chart, weekly chart, daily chart, all the way down to a 15-minute chart. Now imagine if you look at everything that matters under this view, and then distill all of that down to a point. The point isn't to look at everything all at once, right? Because you can look at everything all at once and still not know what to do. Or worse yet, you'll end up with analysis paralysis. Have you guys ever had that? Where you have you're too overanalyzing it and then you don't take any action? We don't want that. We want to avoid that. We want to do the full spectrum of work and then filter it down to a point so that we can take action when the trading day is starting. So what experience level is this for? This week in the markets report is for traders of all experience levels, and I really do mean that. It is a high level report. It is written for professional traders, but I do have to give myself a little bit of a hat tip in that I do think that I communicate very complex ideas quite well in normal language. So I'm never going to try to impress you with some jargon or some technical language, right? What I want to do, and because it doesn't help me either, frankly, what I want to do is look at a broad basket of things, try to find the best things, and then really spell it out in a way that, as if I were talking to a friend, right? Because the notes are going to be for you, but they're also for me. These are my notes, right? These are kind of what I reference to start the week. So it has to be easily communicated. So it doesn't matter if you're day one. And if you're day 10,001, you won't feel like it's too basic, right? They are very high level stuff. We just use a very common tongue to communicate what we find. So it really doesn't matter what you trade. That is a common question that we get is, well, what if I don't trade options? What if I just trade futures? That's fine. It still works for you. What if you trade only commodities? Well, it still works for you. Even if you trade just marshmallows, it's still going to work for you. We look at everything to understand the full picture. So it doesn't matter what you trade. The main thing with the report is not only is it going to give you edge, but it's going to save you hours of time every weekend, right? I told you guys at the beginning that I'm like time obsessed. And the reason is as a kid, I realized, hey, wait a second. If I lived, I maybe shouldn't even say this because I'm going to create some anxiety in somebody. But as a kid, I remember thinking, if I live to be 100 and I sleep 8 hours a day, that's 1/3 of my life that I'm going to spend asleep. So if I live to be 100, I'm going to spend 33 years of my life literally asleep. That's and then what? I'll spend 8 hours a day, maybe, you know, at a vocation of some kind, and then that means I only have 8 hours a day to myself. And it was like this mind-blowing realization that I had as a kid, like, hey, wait a second, if I live to be 100, I might only have 33 years of actual life. But it's true, right? The time is the one commodity that no matter how rich you are, you really can't buy more of. So the main thing is that the report's going to save you hours of time, but you will feel like you have done multiple hours of work by having it. And I think that's really kind of cool. Right? So last point here, regardless of how you choose to find your edge, I do challenge you to try to do this work yourself. Because it's going to make you better, right? The whole point of you being here again isn't, for us to have a good time together, although hopefully we do. But the point of view, the reason that you came here was because you wanted to be a better trader. So I challenge you to kind of do this work yourself just to see what it would take to do it. And because it's going to make you better. So let's take another look at my weekend work. I maybe front ran this slide a little bit, but basically, what is included in the report? And in the report, we're going to look at all the indices, right? So I think it's imperative that you do. So we look at the SPY, the Qs, the DIA, the IWM. We look at all the different sectors as well. We look at the volatility index of multiple ones. So we look at volatility futures, we look at the VIX, and we look at the VIX. So the VIX of the VIX, the vol, VVIX. Really important stuff. Have a very good understanding of that as you go forward, especially if you're day one, or new at all. Just learn to appreciate those volatility products because oftentimes the signal lies there. We also will cover internals, bonds, forex, commodities, and a lot more. So another quick shout here of what we do. And you can see here, regardless of what you trade, whether it's grains, gold, copper, nat gas, oil, bonds, Bitcoin, dollar, or just the SPX. We look at everything, and that gives us the most amount of edge so that we know what's really worth playing. So we'll also be giving you the bullish and bearish ratings for all markets. I also showed you this in the actual report itself, but we go through and we grade it all out. Again, this is just what it looks like here in a live setting. And again, you're not going to look at this and say, hey, SPY, it says bear, should I trade that long for a multi-month swing trade? Probably not, right? And the whole point of doing this is just so you can easily also quantify it, right? Because you can see here that SPY rated out as bear, and then Q's rated out as bear minus. IWM rated out as bear minus, right? So immediately, if you're just kind of eyeballing this to know which one you want to short, although we do provide it for you, IWM, you can easily, very quickly, right? And it's very important that you're able to do this in real time because you're going to be using this document throughout the week to trade and take action. So it has to be actionable. And right away, bang, between the four indices, that's the one I want to go after, bear minus. So we do this on everything. And I think that's just kind of one of the cooler things. It just kind of it perfectly guides you in terms of where to really focus, I think. We also do the sector list and the scan results. So I showed you another example of that in the live setting as well. But with the sector list, what we're looking for is momentum, structure. Maybe structure is more important. Structure is definitely more important. So we're always looking for structure first. What does the chart structure look like? Then and only then, once we understand that, then and only then do we look at the momentum and the squeezes to tie it all together. But when we have all three of these things, structure, proper momentum, and a squeeze, then that's worth further investigation, and it might be worth actually putting our money in if the setup is justified. So here's an example of the sectors to focus from a previous report, and again, we just spell it out for you so to start the week. You're not there's 100 things you could trade, but we've already done the work for you. We've already pre-selected the best stuff to go long, the best stuff to go short, so you don't have to ever kind of feel like the market is overwhelming because there's too many choices. You already know what to focus on. I found myself having this problem occasionally, where, well, a lot more before I really started kind of really driving home the point that this is all I should care about, because you go into the trading week and something will catch your attention, right? You know, let's say it's whatever stock it is, and then you kind of start trading that, but all your preparation was for something else. This kind of gets you back on focus and says, look, we've already graded everything out. Here's the only thing you should trade long, and here's the only thing you should trade short. So I think that's really cool. I'm also going to show you what my watch list looks like. So again, the watch list is a further curation of this. So we start with the sectors to focus, and the sectors are open-ended, right? You can go in and choose whatever you like in there. But if you want us to curate it even further, we do go that far, because again, I need this information to start the week. So this is why I provide it for you guys. And then I rank out every stock, and then I know that if I'm going to trade energy, boom, those are the 3 I'm going to trade, right? And I don't steer away from that. So in the long run, well, number one, you only want to trade the best of the best, or if you're going to short, though, you want to short the worst of the worst. In the long run, this gives us a tremendous amount of technical edge by focusing on the strongest setups. And we do this every week, every single week. So here's another example, kind of another example there of me leaving a couple bucks on the table now that I look at it. This is MPC, right? So I've been telling you guys about MPC for a while. It's just, it keeps grading out as one of the better setups, even back here when I was trading this just a month ago, a month or two ago. And you can see here where we got in, right? So since you're already an expert on the indicator, you can tell me why I got in right there. Check, check. Green boy, check. So that's an entry. Near support. So I got in here on this candle, and I got out on this candle here. Now again, right, you're gonna, for a lot of folks, and this is actually a pretty long trade for me. I was in it for a week, but a lot of folks, they like to buy and hold things for a little bit longer. Oftentimes, you're going to notice that the setup quality will take you even further than just a week long trade. So for example, I got out here, but then you can see it kind of kept on going. So if you have patience, oftentimes these setups can pay you even slightly more than being a fast trader. So we also give you the economic calendar and earnings. Nothing really proprietary about this or anything, right? All I do is kind of go through the economic calendar, write down what I think is important, but I do feel that there's value in including it. And the reason is because, at least for myself, here's what I do. I pull up the report, or I write the report as a PDF, and then I print it out, and I have it next to me at all times, right? And I find myself not only checking it intraday, but then I also find myself checking the calendar just to make sure that I'm not missing anything. Because has that ever happened to you? Have you ever not known about a calendar event and all of a sudden this tremendous burst of volatility pops into the market? You're like, where'd that come from? It's like, oh crap. We had FOMC talking and I didn't know. So nothing proprietary about the calendar, nothing particularly special about it, but it is helpful to have it alongside all of the other much more useful information. So here's another example of a trade that we did here, and a little, slightly outside the box, although it's a little bit more well-known now. CCJ, if you're unfamiliar, this is, I believe, the world's largest uranium miner. So after, the things happened with Ukraine and whatnot, uranium really started popping off, and then energy obviously was going off pretty strongly. So you can see here again, since you're all experts on why I use the indicators, why I got in. And on this one, I think it was just a one-day trade from one day to the next. We got in here. On this one, we actually got in very nice. We got in, we actually didn't get in at the lows, but we got in very close to the 21. And then the very next trading day, it actually decided to pop really hard. So I just decided to take my money and go. 60% gain in a day. I don't remember if this was Friday to Monday or Thursday to Friday. But this is really kind of the style that I prefer. And again, as always with these little examples, if you have a little bit more patience, there's a little bit more on top. So the cool thing with stuff like this is, with Tesla, with Amazon, everybody kind of knows about those stocks. So by doing the work, you can sometimes find all of these subtle trends setting up in other weird parts of the market, in this case, uranium. Like how many of you, how many times have you traded uranium in your life? For me, this would probably be like the third time, but that's why we do the work. So the story of the week, I'm wondering if I should show you a full one here or not. I do want to leave some time for some questions, but the story of the week is my personal favorite, and I've already kind of front ran it a little bit. Let me show you kind of an example here. So this is this week's story of the week. And you'll notice, right, it's not written in any kind of technical language. And I invite you, and I'll scroll through it very slowly if you want to go back and watch the recording and maybe read it if you don't already have it. But the whole point of this is to put everything from down here, right? Everything from here in terms of like, oh, the worst sector is IWM. Oh, gold is kind of becoming bearish. Nat gas is super bull. Oil is still bull. That's helpful, certainly. But what I think really, at least for myself, and I found with you guys as well, helps tie it together is when it's presented as kind of a full narrative, right? It's not just, oh, oil bullish, bull trend on oil, buy pullback. It's presented in a cohesive narrative way, right? And the reason I like that is just because I found, and I know it to be true, humans like stories. We make better memories of a cohesive story, and that's the whole point. So the whole point of this is just to kind of let us know exactly what we want to do. And the last sentence here, and it's pertinent today, we'll see how it plays out tomorrow. If SPX breaks gap support, and it did, we have an animal on our hands. So I'll leave it up for a second in case you want to go back and watch the recording or read it through. But that's by far my most favorite part, and by far the most helpful as well. So the story ties everything we do in the report together so that you're ready for anything. And that's the whole point of this. Let me show you an example of a previous one, and then I'm going to show you what happened after, right? So keep in mind, you'll get this on Sunday, usually right around like an hour, ideally right before the futures open on Sundays when you get this. And then that way you have all Sunday afternoon and evening to prepare for the Monday open. So keep in mind, these are written on Sunday to take action the following week. So this is an older one, but here's what we wrote in the story of the week. The totality of the signals looks completely correct to make shorts lives uncomfortable to at least March quarterly expiration and potentially even to April monthly OPEX. I don't expect the structures to be able to go much higher than that, but let's keep an open mind, and we know where we have to change. I'm going to be focusing on mega cap tech and select high short interest tech names this week, with the understanding that the indices and the VIX need an intraday momentum reset, which will create a viable pullback for the next leg higher. So I'm going to show you the chart example that went along with this. Now, here's the chart example. Mind you that we're talking about going long when the market is doing this, right? Not an necessarily easy thing to do, right? It's very easy to just say it's going to keep doing the same thing it's been doing. Oftentimes it does. But in this particular instance, the story of the week came out, and this is Monday right there. And this is Tuesday right there. It's Wednesday, and that's Thursday, and that's Friday. So imagine if you didn't see this coming, and you're looking at the market, and you're like, oh man, this thing is just beat. It's done. It's going to zero, and you're fully short, and you didn't have this information. That would be wildly uncomfortable. One example of kind of getting you prepared, right? The totality of the signals looks completely correct to make shorts lives uncomfortable. You wouldn't think so, but when you look at everything over the weekend, you wouldn't think this is the setup to make short lives uncomfortable. You'd think they're very comfortable. Look how they went out on Friday, pretty much at the lows, right about to break that low. But in reality, you actually got one of the biggest short squeezes you're ever going to see. So it gets you prepared. Imagine being on the wrong side of this. It'd feel gross. Here's another example. Oh, this one's so long. I don't want to read the whole thing. Let's see. Okay, I'll read the third paragraph if you want to read along. So this week, nothing changes except the risk for a liquidation event in the market has risen exponentially. In a liquidation event, everything gets sold to raise cash as over-leveraged traders finally capitulate. So let's, no, I'll finish the next one. This is good and healthy in the long run, but you don't want to get in front of it until max pain is reached, and we are far away from that. So this is another week, a different example. So let's just see how the week played out. The point of the week was the risk for liquidation event in the market has risen exponentially. That was the key point of this. So this was the following week. Pretty beaten up stuff here, right? Kind of a little sea of red with Amazon kind of standing out. So imagine being on the wrong side of this, right? Because it wasn't that bearish going into that week, and then you get this. So the whole point of the story of the week, again, is just to put everything, kind of button it up and make it actionable for you so that you know what to look for. And then I give you the reasons why, right? It's not an opinion. It's always based on the technicals. So two good examples there of the story of the week being quite good in terms of setting the expectation for the week. We also want to show you how to catch the next big move. So stick around to the end here. I'm going to show you the big signals that I'm looking at. I'm going to show you 3 big signals that are probably going to last at least 1 to 2 years. So this is one that's already happened. And you're like, okay, Sam, tell me what's going to happen next. Stick around to the end because I do have 3 big signals worth your time. But let's talk about this one because this is another example of something that's already happened and that we talked about. So mind you, I'm showing you a chart here of UNG. I probably should have cut it so that it looked correct, but this came out when it was back here, this report. So mind you, right now it's done this and everybody knows about it and everybody loves nat gas, but keep in mind, this came out right there. So what did we write about nat gas before it broke out? Mostly buy signals, still in the early structure, recent 2-day bull EMA cross. So we're looking even at 2-day charts, 3-day squeeze, high-low buy signals, near-term 4-hour squeeze, high-low buy signal, trend DOS is bullish, pattern implies a large move that is still in the inconsistent early building phase. And here's the important part for nat gas. Once it goes, it goes. So this came out and it was right in here. And we call that the early inconsistent building phase. And then look what happened after it went. Big move. Some of you caught this move. Congratulations. I caught a little piece of it. But man, I'm going to be kicking myself till the end of the year because we called this and I only caught a little piece of it. So here you can see a UNG trade that I had, maybe a little bit too big for my account, which is why I wasn't able to stay in it much longer than I did. I also didn't have a great entry on it. I was looking to get in back here. So I did get a little bit of a pullback. And then on the first little pop, I got out. But you can see here, the report then came out here. And then all of the easy move came, all of it, almost more than a double or close to a double. So this was nat gas. We got in for 2, got out at for 250. I went a little bit too big on this, which is why I was not able to hold on to it. But you can see here that if you had the notes and a little bit more patience, which I know a lot of you have a lot more longer time horizon than I do, look at the move you could have caught here. And we set that up before it happened. So a lot of you guys are familiar with my stuff. I like to shoot straight with you guys, just because why not? So let's call trading what it is, right? Let's not hold back any punches here. Let's just call it what it is. And trading is just a game. And how do we know it's a game? Well, because it has rules and it has rewards and consequences for those that play the game well. Those are pretty quintessential parts of a game. In order to play the game well, however, you must be doing something more than the other players. So what does that mean? It just goes back to what we talked about initially. You need to have a technical edge over the other players in the game. Otherwise, how are you going to win? So this is the edge that this week in the markets report can give you, right? We talked about time. And hopefully you've seen kind of the breadth of the work here that we do. So we certainly will be bringing you as much edge as possible so that you can be one of those players in the game that has that leg up. And that's the first step in winning. I used to really like this artist before I started working at Simpler. And then I came to Simpler and it turns out that John actually has a bunch of their art. And I really like this one. This was hanging in John's office. So everybody wants to be Cortez. Are you guys familiar with the Cortez story of when the conquistadors came down to, I believe it was Mexico, maybe South America, and they traveled on a boat from Spain, and they get to their land that they plan on conquering, and the Cortez's men are hungry and they're cold and they miss their wives or their kids and they're complaining. And guess what Cortez does? He burns down the ships. So now there's no going back. And sometimes the only way to move forward is to make it the only choice. Everybody wants to be Cortez, but nobody wants to burn their ships. Trading is difficult, but it is rewarding, very much so. Not just financially, but it is also rewarding because it'll teach you a lot about yourself. My goal is to give you the tools to succeed. If you have the spirit to burn the ships and be the best version of yourself, then you will succeed. So the big question is not what do you want? The big question is really what are you willing to be uncomfortable for? I made the decision that I was willing to be less comfortable in having less personal time so that I can maximize my edge in trading so that I can achieve my goals that are much bigger. But that decision isn't for everybody, right? Maybe you have kids, maybe you have, maybe trading is your side job and you have another main job that you have to, certainly focus on. And that's the reason for the notes, right? I want you to have that edge, but it's not giving up 4 hours of your weekend every week. Potentially more if you don't, if you're just starting to learn the process. Like I've gotten down the process down to about 4 hours a week, but that's because I've worked on it for a while. But that decision isn't for everybody. So my goal is to be able to do the work for myself, but then also share it with you guys so that you can have that edge and ideally maybe spend a little bit of extra time with your dog. So here's how I see things. It's us versus them. You can see simpler trading there versus the JPMs, the Goldmans of the world, and they have the big boat. But guess what? They have all the gold. And we have a real shot. We have the right tools. We have the right group. And we can win if we work together. The value of time. So currency means nothing if you still ain't free. So this is kind of going to tie it all together. I mean, it can take hours to prep each week. I can just tell you straight up, it takes about 4 hours to do it. And that's after me having, multiple years of practice and understanding my indicators quite well. It's just, we look at a lot, but it's worth it. If you have the prep work delivered to you, and if you can have the prep work delivered to you and have your weekend time to do the things you love, what's that worth? What's it worth to have the edge in the market and have your weekend, right? I ask myself that all the time. Like sometimes I'll be working on the report on this weekend and I'll think to myself like, man, if there was somewhere where I could go and instead, just get the report from somebody else that I trusted to do the work, to be as obsessive as I am, right? To put in the level of quality that I would expect from myself. If I could just get that from them and then I can go to the lake, what would that be worth to me? Maybe I think about that too much because I'm the one that has to do it. So, and I enjoy it though. I do enjoy it. And just remember, time is the one commodity you cannot buy more of, regardless of how many gold coins you may have in your pocket. So currency means nothing if you still ain't free. So I promised you at the beginning of the session that I would show you two big signals. If you follow me on Twitter, I've already shown you this one, but it's worth showing you again because it's that damn big. But for those of you that stuck around this long, one, thank you. Right, again, it's way after hours on a Wednesday afternoon or evening. You could have been anywhere. So I appreciate you being here. But let me talk to you a little bit about this this signal. Somebody said the biblical signal. Yeah, this is biblical. I wasn't being hyperbolic when I told you that these signals are big. So this is the first one. Now, if you want, you can go follow me on Twitter. I already posted this, or I talked to you about this in the trading room as well. But I first brought it to you in the report. Here's a chart of the QQQ. This is a monthly chart, folks, of technology. Now, I showed you how to read the indicator. Remember, these are thrusts. You can read them as buy signals, but in reality, it's more like thrust. So think of like a plane. You need that thrust before you can start flying. That's what that looks like. So you can see here, this is 2009, just to put things in perspective. 2009. You see how you got the sell signals before the crash? And then you get the buy signals after the March, what was it? March 9th, 2009 was the low. You get the buy signals after that. And then from 2009 all the way through present day, that is 13 years, guys. How many of you have kids that are younger than 13? If your kid is 12 or under, they've never lived in a world where the Qs had a sell signal. For 13 years after you got the 2009 buy signal, you got nothing other than beautiful trend, not a single sell signal whatsoever for 13 years until just now. So that's signal number one, right? Again, does it mean it has to happen? No, but I'm not going to fight an indicator that told me to buy in 2009, told me to sell in 2007, kept me in the trade for 13 years. I'm not going to say it's wrong now. So that's signal number one. Be aware of this as you trade in this market. Even if we get short squeezes, even if whatever happens, this is the big signal in the background. So don't think that we've made a bottom quite just yet, because the signal is that big. Let me show you the next two. I haven't shown these to anybody, but as a special thanks for being here, I'll show them to you. And maybe you already know one of them, but I'll show you two. So here's the next big signal. The next big signal. And notice that these all three are going to work together. The next big signals are volatility and the dollar. So I told you this was biblical. First sell signal on the Qs in 13 years. First buy signal on monthly VIX in years. This is VIX over here. And you see how it already has stacked moving averages, and you see how this squeeze is ready to go imminently. And you see how the trend oscillator, which I showed you, you're all experts in, you see how that looks correct now? So put it all together. Stacked moving averages, squeeze, imminent, ready to go, buy thrust, trend oscillator correct. You see this red line up here? That would be resistance, guys. That comes in around 75. It's trading 32. That's signal number one. Signal number two, this is the dollar. A lot more of you are going to be familiar with this one. This is a quarterly chart of the dollar, so ultra long-term stuff. Each bar represents 3. See that squeeze? See that thrust signal? And you see this common high that it's breaking above? You combine these two signals, guys, and it's telling you that we're about to experience something for the next 1 to 2 years that's going to be unlike anything. At least I'll speak for myself, because I'm under 40 years old. You would have had to live through the 70s to experience something like what is setting up next. So I'm not here to tell you scary stories, right? Again, you're a trader and your job is to make money in any market. So don't be afraid of this. This is just volatility signals. But again, volatility is just a synonym for opportunity. So these are opportunity signals. So don't be afraid of them. But I do want to show them to you. One, because you stuck around this long, and two, just so you can kind of understand the bigger picture. So these are the next major signals to follow for the next coming 1 to 2 years. The long-term signals are stacking up, and now is the time to be prepared for whatever comes next. So in this week in the markets report, we will walk this rocky path together to make sure that we stay on the right side of the trade, because these signals are going to last a while. So there's another picture of myself for whatever reason. What's included in each issue? I'm not going to read this. We've already covered it, right? We've already covered it. You've gotten a chance to see everything. Basically, the answer to what's included in each weekly issue is everything. Doesn't matter what you trade. Everything is included, because that's the only way I know how to work. So everything's included. You will also get access to not just myself, but to all the traders in the ST training room. This is regardless of what you choose, whatever path you choose to go on. But you guys do have access to us in the training room. So make sure you stop by, ask some questions, maybe send some emails, and just kind of build up your knowledge there, because why not, right? It's if you got a chance to watch, professional basketball team practice, it might make for a good time. So stop by and check us out in the training room. This week in the markets, we are offering it to you guys, at least initially, with a trial. as well as a monthly option. For the first week trial is really only $7. So what I've shown you here, what I'd like for you to do is try a trial, right? Give me the opportunity to show you the quality of the work if you've never seen it, right? And this is what you will get next Sunday for $7. Now, obviously, my goal is to provide you with more than enough value so that you'll stick around. But for $7, I'm going to ask that you sign up for a trial because give me the opportunity to earn your trust. And if you've already signed up or you've already seen it before, hopefully I already have some of your trust. So I want you to sign up for a trial. It's only $7. For those of you that want to go a little bit extra, the extra step, right? For those of you that are a little bit more familiar with the work and you know that it would be valuable to you, then we also already will be offering an annual membership to this. With the annual membership, obviously you'll get it for a discounted price, but then it also comes with a little bit of a bonus. And the bonus, I think, is actually a very nice bonus because the bonus is going to be showing you how I prepare for the daily pre-market open. So we're going to do this June 2nd. And it says an hour. I'm going to give you guys more time than that, though. We'll go longer than that. But here's the thing. The weekly report that I've shown you here, that I asked you to sign up for a trial here, this is going to cover you for the week. But day to day in this market, 5% up, 5% down, it pays to also understand what's going on before the market opens. So I'm going to show you my checklist that I run through. Very simple checklist, but super powerful. It takes me about 15 minutes to do it pre-market, and we're going to do a session together. And I'm going to give you the checklist, and then we're going to do it live so you can see how we grade everything out. And then that 15 minutes pre-market, once you have the checklist and the know-how, it's going to reshape how you look at markets. So you'll have the weekly report covering the big picture for the week, as well as the daily stuff. For those of you that are a little bit extra meticulous with your preparation. So a couple of nice comments here. I'm not going to read them because well, it's just not a great look to read good comments about yourself. But the report has already been out for a while. We've gotten really only good feedback from it. And it makes me really proud to put it out there. I think this is by far my best work. Again, I really do it for myself, right? It is kind of a slightly selfish endeavor because it is just, it started out as just for me. But by sharing it with you guys, one, I get so much feedback from y'all in terms of what you're looking at after the report. And then two, putting it out there to a large group of people with all different biases and different types of trading personalities has made the report that much stronger. So as a quick aside, just a quick thank you to you guys for allowing me to do this, because I used to do these just for myself. And now that I'm doing them for a group, they are so much stronger, more accurate, more actionable. And we're going to keep increasing that as we go forward. So thank you for those of you that already signed up. You being on the team makes me better, and hopefully me being better makes you better. And that's the goal. So choose the package you want. We have the 7-day trial. At the very least, guys, I want you to sign up for that. You sat through an hour-long presentation on a Wednesday. If it was up to me, I'd give it to you for free for 7 days just so that I can gain your trust. But for $7, let us send you this for at least 1 week, just so you can see what the quality of the work. If you decide that it matches with something you want, then stick with it. But at least give us that. Give us the 7-day trial. For those of you that are already familiar with the quality of the work, then we do have the monthly option, which is $79 a month. And then we also offer the annual option as well. It's the only one that comes with the bonus live session, and you also get a little bit of an annual discount as opposed to the monthly rate. So that is the presentation, guys. Thank you again for being here. I always close my presentations with this slide. You get familiar with the traders. Maybe you're familiar with some of the mods, but there's a group of people here at this company that you'll never know their names, and they really are they're the glue that kind of keeps everything together. So this is a very old picture, but I do want to at least in spirit shout out the rest of the folks whose name you'll never know, but who provide the foundation for everything that we do. So thank you again for attending, guys. We'll get to some Q&A here in just a sec. We'll try to make it quick. I know you guys probably have something to do tonight, but if you stuck around this long, let's stick around for the Q&A. We'll answer your questions. For those of you that have to go, you can catch the recording certainly, or you could just email me, sam@simplertrading.com. Send me an email. I'll get back to you as soon as I can. For those of you that have to go, or frankly, even if you are going to stay for the Q&A, I always say this: you could have been anywhere in the world tonight, but you're here with me, and I appreciate that. So again, if you have any questions, send me an email, and I'm going to go through any questions you guys might have. So thank you again for being here. It's always really cool that you guys make the time. All right, so I do have a list of questions here. So I'm just going to go through them. Looks like we have about a little over 10 questions. So in slide 13, it looks like the SPY is going down while the energy sector is going up. How do you resolve that? That's a great question. So that's a really good question. I love that question. I don't know your name because they didn't write down your names, but if you're the person that asked, in slide 13, it looks like the SPY is going down while this energy sector is going up. How do you resolve that? If you're that person, have an extra drink on me tonight, because that's a proper question. That's a good one. That's the kind of question I would like. That's the kind of question I would ask if I was in the audience. So in this instance, actually, it's actually not. I would counter. This actually is. I wouldn't say it's actually going down. Not in this moment in time, at least. We have to kind of work with the exact picture that we have in front of us. I would actually say that this is more of a sideways market, right? And when you draw it in like that, you can really tell. You can also look at your moving averages, and you see how your moving averages are all sideways. At the end of the day, if I just draw it in here, you'll just see it much more clearly. So in this instance, I would actually say that the SPY is not necessarily going down. It doesn't have a bullish tenor to it. So good eye there. But this is more of a sideways market. So in a sideways market, you can trade these very good setups where you actually will have somewhat of a problem, maybe the market that we're in right now. Because if you look at the SPY now and you look at XLE now, XLE still looks great. It's still the best looking sector in the market, but the SPY looks way worse. So in this particular instance in time that you're referencing on the slide, it's not an issue because you had a sideways index. So you did have some level of stability, although not super bullish, but it was relatively stable. And then you can go find relative strength. There is a scenario, though, that we're in, probably as of today, where the SPY actually is so heavy to the downside that it takes the shine off of the XLE setup. So how do you trade that? That's really the question you're asking. In this instance here, when it's sideways, I don't really care about it, right? I'm going to just, that's stable enough. I'll have my parameter below the low. That's where I'll start to get a little bit more cautious when I'm trading this. But in this instance in time, the way that you would trade it is with smaller size, because the XLE still looks good. It still looks kind of like this, but the SPY looks way, way, way worse. So how do you overcome that? How do you trade something that looks good long in a bad market? You control for that with risk, size, your positioning and your size. Today's market action was the opposite of what you showed in the free room. The advanced decline is extreme. The ticks were below zero, the trend below the moving average, and sloping downwards. Yeah, so yeah, we're saying the same thing, actually. So you're saying it's the opposite of what I showed you, but in reality, it's just the bare side of what I showed you. So in the training room, I showed you, and I kind of wish I could show it to you here. I showed you what to look for in terms of looking for a trend day, right? So looking for a trend day, just write this down. Typically, you want to see the advanced decline, the money sign ADD above 1,000 and holding, right? So from anywhere from 1,000 or higher, ideally above 1,000, with the ticks, at least in the first 30 minutes of the day, staying above zero, ideally the rest of the day, mostly above zero. And then obviously you'll use your moving averages in terms of price to determine that. What we saw today, I wouldn't call the opposite. It's just the inverse. I don't know if we're saying the same thing, but what you saw today was just the bare version of that. So today you actually had the advanced decline. I think it was definitely below 1,000 all day, got down to around negative 2,200 on the advanced decline, and then the ticks were just horrific all day. So what you saw there is just a bare version of a trend day. What strategies do you employ? It depends on the setup. I mean, sometimes you'll have a setup that's very directional, right? So for example, the one we just looked at back here, these are setups that you could play in the right market with calls, right? Because when you have a very directional setup, you want to take advantage of that directionality with something like calls or credit spreads or debit spreads, things like that. If you have a slower market where it looks like it's a decent setup at a bad market, you can then compensate for that by doing butterflies, right, which are a little bit less directionally dependent but much more theta rich. We cover strategies somewhat in the report, but really the main thing that we cover is just how fast is it going to move. And if you tell me how fast something's going to move, then I can tell you the strategy to use, right? So if you tell me something's going to move fast, I'm never going to do a butterfly. I'm always going to do calls or spreads. If you tell me something's going to move slow, I'm never doing calls or puts. I'm always going to do a butterfly or something like that. What are the moving averages on the charts? I like to keep it very simple. So I'm actually going to show you just 3. And I really think that these 3 cover you for everything. The green is the 21. That's an EMA. The 50 is the blue. That's an SMA. And then the 200. You'll see a white one, and you certainly can add it. And I certainly would suggest at some point you do. But I think initially you could just do the 3. These really do cover you for everything. You'll see another one. This is the white one right here. I don't have it on the daily for now. It would be look like this. That would be the 8. So the 8, 21 EMA, the 50, and the 200 SMA. Sounds simple, but it covers you for everything, I found. Do I look for longer term trades as well? I don't necessarily think in those terms. So the terms that I think of are more like this. So something like this, right? This would be a longer term trade because I'm showing you literally the first sell signal on the QQQ on a monthly chart in 13 years. This is not going to be a day trade. This is going to be a long trade, right? Or long time. It would be a short, but it would be a long lasting trade. So I don't really think in those terms because I normally, when I'm trading at my best, normally I'm in the trade for about 1 to 5 days. But I always look at long-term stuff like this because that drives the smaller term, right? So if you think about kind of the thought process here, you have the long-term cycle, kind of looks like this. And inside of the long-term cycle, you'll have a lot of little cycles, right? So you're going to have a lot of ebbs and flows in the context of this big flow. And then inside of that intermediate term flow, you'll have a lot of little cycles like this. So I'm always looking here and here and here, right? Long-term, short-term, medium term. But most of the time for my own trading style, working in this time frame works best for me. If you're kind of a longer term time frame person, we cover that as well because that's where all the information is, right? That's all the information really does come from the longer term. What happens when I go on vacation? Good question. I still send it. I've been on vacation twice, and we still sent it out, and we still do the work. So we can go on vacation, but we still do the work. I can't even imagine going on vacation not doing the work. Good question. I like the question, but yeah, well, the answer to just directly answer your question, what happens when I go on vacation? Nothing. We still do the work. You'll still get it. Looks like somebody says, it looks like you already have the report. So if you're already a member and you're here, double thank you to you. Because you already know what's up. But it looks like you still made some time for us, so thank you. The report is excellent. One small ask: could you start putting the time of day on the respective reports are coming out? Yeah, the expectation should be before 5 p.m. on Sunday. I want you to have the report before the futures open on Sunday. So that's the expectation. Where can you find the indicators? Maybe somebody has answered that question in the chat. I'm glad you're interested in them, but maybe somebody can help you out there in the chat. All right, well, last question here, and then I'll let you guys go, and you can have your favorite brown liquor to reward yourself for taking a step to become a better trader tonight. Do you ever make a major change to your story of the week in the middle of the week? Great question. I haven't before. And really, here's kind of why. And I think that's maybe a good question to close out on. So this is the one from this last Sunday. And for those of you guys that are already signed up for it, excuse me, I've been showing this in the rooms and whatnot, but after today, it's going to go back and it's just going to be between us. So I apologize if, because if I was signed up, I wouldn't want to, I wouldn't want me showing this off to everybody either. But after this, we'll go back to normal. So here's what we wrote in this week's. This was this Sunday. So start by reading the last week's story of the week before reading this one, because I wanted to re-emphasize last week. I want to re-emphasize the point, right? So I did ask them to read the last week's, but here's what we talked about. Nothing has changed, but things have shifted. If we focus on the long term, the charts collectively appear to have taken irreparable damage relative to the central bank tenor currently. The target remains 350 to 340 on SPY. However, if we focus on the short-term exhaustion signals, then a lot has changed. The potential for a bounce relief rally is at the highest that it's been at these levels, blah, 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 blah. So we set the stage for two things here, right? One, we set the stage for a potential bounce relief rally this week. So it was going fine until today, based on the short-term exhaustion signals, but we don't say that that's the bottom, nor do we say that's the low, right? We re-emphasize the longer term target, which is 350, 340, right? So we emphasize that first, but then we talk about exhaustion signals. We then talk about how a break of 3930 on SPX would invalidate the scenario. So your question was, have I ever updated have I ever changed the story of the week in the middle of the week? I haven't had to, because of the if this, then that approach that I take, right? I never come into this saying it's going to go up and I know it, right? What I do say is, this is what it looks like, and if it does this, then we continue with this path. If it does not do this, then we go down a different path. So notice that we set the stage here for a relief rally this week, right? And at least Monday and Tuesday was going pretty decent. But we also set the stage on how to invalidate it. So any break of 39 invalidates the squeeze scenario, because there is no support below there, and any breaks would not be particularly good. And then we actually close with that comment as well. So if the SPX breaks gap support, which is 3930, then we have a different animal on our hands, right? So I'll leave this up for a second here just so you can maybe pause it or read it, but I think that's a good question. If I ever had to change it in the middle of the week, the way that I would do that is actually upload a vid to the site and then contact you guys. So far, we haven't had to do that, but in the event that something dramatic were to change in the middle of the week, which hasn't happened so far over the course of doing this for well over a year, then I would update you guys with a video in the middle of the week, and we'd update the website that way. All right. Well, I think we got to the end of the questions there, guys. So thank you very much yet again for being here. Again, not only do I appreciate you guys giving us the time after hours. You could be on your third margarita. Maybe you are. I don't know. But you could be on your third margarita, watching some television, doing whatever you want, hanging out with your dog. But you chose to be here to be a better trader, and I find that to be very admirable. Hopefully what I've shown you here, you find can add some value to your own trading. I know that it can, and hopefully you guys are signing up for at least the trial, and that just give me the opportunity to show you the value of this stuff. Also, regardless of what you do, I'm just going to talk to you straight to close the session here. Add this to your trading in some way. If it's not through me, then do it for yourself, right? What would make me infinitely happy, what would make me happy is if you signed up for the monthly or the yearly, admittedly. What would make me very, very happy is if you signed up for the trial and then you said, I can do this myself. And then you try to do it yourself. that would make me even the most happy. So I'm here for you guys. I love being part of the group. It's a lot more fun trading with you guys than without you guys. You guys make me better, and hopefully it is a hopefully it is a good cycle that we create of making each other better. So yet again, thank you for being here, guys. One last time. You could have been anywhere in the world, and you chose to be here with us, and I appreciate it. So thank you as always. Have a great Wednesday, and I'll see you guys next time I see you. Cheers.